why don't you start by talking to us a little bit about your music career?
My music career. Well, I don't. I still like to dabble. I record things from time to time. Again, I know that I see your guitar behind you. I'm actively building a studio in my basement. So my office doubles as this office that I'm in right now doubles as a studio for now. But like my guitar is over here, my keyboard's over here, my microphones, all that kind of stuff is all off to my left.
Very nice. Now
But
you say studio brand. Is that actually like soundproof room, the full deal?
yeah,
Wow.
yep.
Okay.
Yeah, so that's in process right now.
Very cool. Do you like write your own music or covers, or what kind of music you putting out there?
Yeah, a lot of what I do is I do like to write my own music. I'll do some things that are kind of covery, I guess. I do I typically like to try to put out something around Christmas too that's like fun or funny, and so I usually put that out. And that was the first time that I actually uh, for many years, people had no idea that I had a musical side to me. But then one day decided to, um, kind of open up that side, and then all of a sudden, there was a lot of people that had a lot of interest in continuing to push on that. So, um, the very first thing started when I was asked to sing the national anthem, and I did it in front of our board. We had the whole board out to a Royals game, and so I've done it a couple of times at the Royals, but that first time of doing it in front of your entire board, and this is back when I was at BATS, that was pretty funny. And then, like I said, it just kind of went from there.
It's awesome.
It's
I love
amazing.
it.
Yeah.
It's always fun, I'm sure, to get your friends and family around, bust out the guitar. I'm sure everyone loves to sit around it.
Yeah, and I like to do I do theater every once in a while, music theater type stuff. Time doesn't really allow me to do much of that these days, but yeah, when I can.
Love it. Awesome. Well, why don't you tell us a little bit take us back, tell us a little bit about your career and bring us up to where you're at today at LODAS Markets.
Exchange world. So I was fortunate to be part of a startup called BATS Exchange. BATS was started in the Kansas City area, which is where I live, and where my girls have grown up. But yeah, BATS was really positioned to have a lot of excellence in the early days. It was um, created to be a competitor to the NYSE and the NASDAQ, and so we had a very early start, and were able to grow very rapidly, which was exciting to be a part of from the beginning. And then as we grew, we started as an ATS, then we became an exchange a few years later. I had the opportunity to move over to London while I was with them, and kind of first person on the ground to start building BATS Europe. And that was incredibly exciting to be a part of, and um, learned a lot about startup culture, both in that first iteration of BATS, when we were starting from the very beginning, and then getting to redo that again when moving over into BATS Europe, and then moved back and helped to start a couple of other business lines, including our options business and then our ETF business. And ultimately, we were acquired by the Chicago Board of Options. Around that time, the time of that exit, I left and I went to the New York Stock Exchange, and I was there for about 5 years, overseeing trading and market structure and ETFs. And ultimately, realized that the where the puck was going, so to speak, was to the private markets, and so really wanted to be able to leverage my experience and also my interests in the private markets and build a secondary market for alternative investments. So basically, making things that are historically illiquid, making them liquid. And so that was an exciting thing to be able to build. We're the first ATS that focuses on that type of market. But as we launched that, we also saw that there was another major need. The infrastructure of the alternative investments is very antiquated. So we wanted to be able to, at our core, we're a technology company. So we wanted to be able to build additional technology features that would really help kind of the modern day investor in the alternative investment space. And in particular, really partner with those sponsors. So we are now a transfer agent as well. And so that allows us, In the alternative investment world, the transfer agent is a very key component to kind of the infrastructure of the funds. In the equities world, the DTCC plays a much bigger role, but here the transfer agent is much more important. So we built a platform that created a straight through processing. There's other companies that have created straight through processing that helps people onboard new investments and raise their capital and use the technology to do that. But ours is the first one to be, kind of fully integrated from the onboarding system to the transfer agent system, which manages the cap table, communications, distributions, all that kind of stuff for the sponsor, all the way to the exit, because it's also integrated with our secondary market. So really, we have the ability to allow a sponsor or a fund to be able to control the entire life cycle of the investor experience. So it's been a lot of fun to build that.
And that was an early on situation for you guys then, as you mentioned before. Again, maybe clarifying too, you could clarify for the audience, ATS, what that means for folks who are just getting up to speed with what ATS is.
Yeah, so ATS stands for Alternative Trading System. And at its core, an ATS functions a lot like a stock exchange. But where a stock exchange is self-regulated, an ATS actually has to outsource its regulation to FINRA. So therefore, you also have to be a broker dealer. And so FINRA is the one who regulates us. And just as an extra point of clarity, BATS, before it became an exchange, was an ATS. In fact, BATS stood for Better ATS, or Better Alternative Trading System. Once it became an exchange, that acronym didn't really mean anything anymore.
Take us back, because you mentioned you saw the puck was moving toward the private markets. Kind of what gave you that insights, and kind of, what were some of your big takeaways while you were working at BATS and within the industry?
Yeah, so I think it really came when I was at the NYSE. So, I realized that our biggest competitor was no longer NASDAQ. It was the private markets. Companies were staying private longer. And so the biggest thing that we were trying to do as an initiative within the NYSE was, how do we get more and more companies to list when companies are wanting to stay private? And so that being such a big focus, that was kind of the first flag to me. The second flag was when we started to see major institutions that had historically never really dealt in the private markets, or at least allowed their investor base to have access to the private markets, the Morgan Stanleys, the Goldmans, that type of thing. They started creating funds specifically, targeting their individual investors. And so when I started to see that happen, I knew that that's really where the new wave of money was going to be coming from. It's, again, this institutions and super affluent individuals, they have always had access to the private markets, but outside of a handful of exposure to REITs over the years, there just really hasn't been a lot of exposure to alternative investments within the individual investor community.
Yeah, absolutely. Yeah, so I guess seeing the opportunity, and as it's kind of come through today, there's still a lot of inefficiencies in the market. To your point, with antiquated technology, no straight through processing for most. You guys have changed that, which is amazing. What does it look like today, and kind of where do you see kind of things going? I guess maybe to talk about kind of what are the flows, what's the liquidity look like in the alternative space? What do you think about those thoughts as well?
Yeah, I think one of the things that I see in the alternative investment space is there are people that are trying to use technology to change the industry and to improve it. The problem is that all of those different people are working in their own silos. And so a lot of those, there isn't great communication between the different participants. And so that's one of the reasons why we created all three elements of that process, right? So that, we can communicate with ourselves really easily, right? We're API based, so everything we do is API. So we connect that straight through processing to the transfer agent, to the secondary market. So, whatever somebody needs throughout that entire life cycle, we can do. And so, like I said, a lot of people are working within their own individual silos. You see a lot of people that are creating blockchain solutions and things like that. And that's kind of been a buzzword for a long time. But again, even when somebody's building a blockchain solution, for the most part, it's still within their own silo, and people are having to go to that silo to be able to interact with it. And so really, there's no overarching platform that allows everybody to communicate, very efficiently. I'm starting to see some things being created. iCapital, for instance, is they created their first distributed ledger technology fund in partnership with UBS, and in doing that, I think there is a decent push. I like the way that they're approaching it, as far as being able to, again, replace, and in our world, in the alts world, the DTCC, they have created something that's, the idea was to be pipes to connect everybody. That's called AIP, and but it's kind of lacking, right? There's only so many things that it does, and not a ton of people have really implemented that into what they do, or at least if they have, it's at a very minor level. And so really, this is, iCapital's come in and said, we're trying to create something that's going to help people communicate more efficiently, and they're looking at it more as a utility. I think really what happens is you need to have somebody who's viewing their role in this market as a utility, and that's how you really kind of move things forward. So I do believe that it's still going to take a long time for us to really advance and become a very connected market. But for us, we realized we had to start being very connected within our own walls, and then find ways to connect and partner with those that are really advancing things and moving the puck forward.
That's great. Yeah, I guess you bring up a couple valid points. Obviously, the AIP side, as you mentioned, doesn't have very many flows. Just the things that it can do from an SEC point of view, the retail side of things. Obviously, there's a great number of flows and all that, but integration is definitely key. To your point, having APIs, working with people that you can integrate with. I guess, what does that look like for your ecosystem? Who can you integrate with? Who are you saying that are adopting this and working with you guys? Curious about that as well.
Yeah, so for us, we have APIs, endpoints that we create the API, and we send those out, and people can connect directly to those. And so in some cases, that could be a broker dealer, that could be a platform that's already in existence. It could be other transfer agents. It could be many different types of things. We've actually even created different implementations that could be effectively like a pop-up in somebody else's ecosystem. If you're familiar with Plaid, how Plaid works, where you can connect and you can visibly see that, and it stays within that person's ecosystem. We created something that looks and feels a lot like that for our secondary market, so that if somebody wants to be able to sell something in somebody else's ecosystem, it can connect on the back end to us. And then we're, again, very aggressive and wanting to do API integrations with others. So if you don't have the bandwidth to be able to connect with us, we can work to connect with you.
Very cool. And so tell us about some of like the private market investments you guys are working with. Is this primarily like private companies?
Yeah, so where we started was the kind of the biggest asset class. We knew that we wanted to address the real estate market, and it was relatively easy to start there. We started with registered funds. In many cases, that winds up being in the structure of a REIT. And so that was the first place where we started. After that, we started doing limited partnerships, and we did Reg Ds, and we've done Reg As. And so right now we're kind of wrapper agnostic. So no matter how you structure the real estate deal, we can work with it. Some of our most actively traded things today, right now, believe it or not, are DSTs. So that's a Delaware statutory trust. It's kind of like a fund version of a 1031 exchange. So you get to have that tax benefit of pushing tax burdens off into the future, but you can do it in a DST structure. So we're seeing a lot of people wanting to trade those today. And so we're doing that. So right now, though, real estate represents, in whatever form or fashion it is, represents about 75% of what is traded on our marketplace. But we also have private credit that trades on our marketplace, and then also energy funds that trade on our marketplace. We are agnostic to what type of fund trades. The biggest thing for us, though, before we start as a secondary market, before we start adding a new asset like private equity or something like that, is you always have to have both buyers and sellers, right? So that's a whole new audience. If you introduce private equity, it's a new audience from those that are buying and selling real estate related investments. So, but again, we're very open to being able to grow. Now, as it relates to the transfer agent world, we're also agnostic there, but we don't have that same burden of creating a marketplace, right? So if we're providing fund services for somebody, we really don't care what the underlying asset is.
Yeah, that makes a lot of sense. Obviously, if you're a TA or transfer agent, you have one side of the coin, but integration is probably crucial from a true adoption of a secondary market, right? On both sides, buyer and seller.
I will say though, in particularly in private funds, if we're a transfer agent for a private fund, you do typically see a lot of the buyers in those funds happen to already be insiders. So let's say we did have a private fund where we were a transfer agent for, it would be relatively easy for you to assume that there would be buyers, existing buyers already in that ecosystem, because if I'm already in the fund, particularly if I can get it at a discount, I'm going to be very interested in buying more. If I like the fund, I'm open to buying more.
That makes sense.
Yeah.
I guess more from a type of investor, kind of expanding more to the retail investor space with alternatives. Just curious what your thoughts are, what you've seen for your guys' lens on that side of things too.
Yeah. So right now, we do have a thing on our marketplace that says for you to be a buyer, you do have to be an accredited investor. Most private investments, you have to be an accredited investor to own anyway. But that even applies to being a buyer of our real estate related funds or registered funds where you don't have to be accredited. On our marketplace today, you do have to be accredited because we don't do suitability. So while you have an investment that may not need to be accredited, states might determine that if you're not accredited, you'd have to meet some suitability standards. And like I said, today we don't go through any process to measure suitability. So, but most of our buyers we have a lot that are institutional. We have a lot that are family offices. So anything from an insurance company or or an equity fund of some sort, all the way down to family offices.
I'm curious if it takes us down a rabbit hole. Uh, could you tell us about what you mentioned, the DSTs? Could you tell us a little bit more about that?
Yeah. So as far as DSTs, you're wanting to know more about what a DST is, or more about
Yeah,
how the
just
secondary market, how it works?
kind of understanding what it is and how the secondary market works.
Yeah. So again, a DST is a real estate related fund. Usually it's buying an asset or assets where the investors are actually deeded on the fund, right? And so if I own a multifamily building and I'm wanting to sell that multifamily building, I can sell it and I can do a 1031 exchange into another multifamily building or something else. And I can continue to get that tax benefit carried forward. But in some cases, as people get, particularly, they don't want to take on the burden of managing an asset. Particularly if they're older, as they get older, there's like, I want to pass off and be more of a passive investor. And so there's a structure called a DST, Delaware Statutory Trust, where you can take your investments that you would have done another 1031 exchange into, you can actually take that, invest it into a Delaware Statutory Trust, and get that same tax treatment. And a lot of times when you do that, in many cases, the person never leaves a Delaware Statutory Trust. Like they'll if that one ends, they'll roll it into another one, and because they've made the decision that they want to be passive going forward. And then upon their death, that Delaware Statutory Trust moves to its to the beneficiary of the estate, and they get the stepped up cost basis. And in many cases, like if they get that stepped up cost basis, they don't necessarily want the asset. They want the proceeds of the asset.
Right.
And so there's secondary liquidity that they're looking for in those particular situations. And real estate has moved quite a bit. There's people that have been holding Delaware Statutory Trust that are thinking that there's some additional risk to continuing to hold various positions. And so we do find a lot of people right now that are looking for liquidity in real estate generally. And so the more that they're interested in looking for liquidity, if the DST is not looking to have an exit, then they're looking to have their own private exit.
Really cool stuff. Talk to us about let's dive into the secondary markets. Talk to us about secondary liquidity. You mentioned, some of the different users that are on the platform, but kind of just curious, take it from a high level. Kind of what the secondaries look like on your platform.
Yeah, so for us, we have a wide range of products that are listed on our marketplace. I mean, we're the only market that has, for instance, Blackstone's B REIT listed on our marketplace. Today, that doesn't trade a lot, but if you looked at a year ago when they had their redemptions were being capped, meaning that, a lot of NAV REITs, which that is one, they have monthly redemptions but they have limits as to how much they'll redeem on a monthly basis or a quarterly basis. And so when they were hitting their caps, there was billions of dollars that were looking to exit all at once. We actually listed it on our marketplace and were able to help investors that were, unable to find liquidity, or at least full liquidity, be able to have a full exit with us. And so we have other NAV REITs that are listed. Again, B REIT isn't trading actively right now because they're meeting redemptions. We have Starwood listed on our marketplace, and many may know that they reduced the amount that they're actually going to be meeting. So that's called gating. So you have caps that they already announce and is listed in their prospectus, and but this now is their gating. They're further reducing the amount that they're actually going to be able to match, and which has caused additional selling pressure and interest. And so we also have interval funds. There's funds like Blue Rock and Apollo that have funds that are also capped, and there's people that are looking to get out that can't. And so in those situations, we have the ability to match those funds. There are other funds that are closed that they don't have a redemption structure built into them. And so those are probably our most actively traded because people have owned these things for 10 years and have not seen any liquidity at all. And so they're just wanting to have an exit so they can kind of pass the torch to somebody else that has maybe a longer term time horizon. Right. And so it might still be performing well. It might be having good distributions. But they're like, I, for one reason or another, need to have a liquidity event. We do work with a lot of financial advisors, advisors that have bought books of business and they'll inherit assets that they don't know about, they don't want to know about. And so, so they'll have, in some cases, you might buy a multi-billion-dollar book of business and several $100 million of it is wrapped up in alts that you just don't know and you don't want to diligence and that type of thing. So in many cases, those advisors are saying, how can I get out of these alternatives? And so they'll work with us to help alleviate those assets that are on their books. And that way they can now, as they're doing portfolio allocations for their clients, they can say, this is the portfolio allocation that we believe is best for you. And so it provides a tool for them to do that. And of course, you have the general life changes, whether it's through death or divorce or various other events that might cause somebody to want or need liquidity.
That's really interesting. You kind of said that you regardless of wrapper or asset class, you're pretty much agnostic. Is that correct?
That's right. Yeah. So we've had again, we have registered funds just because in many cases they're really big. They're multi-billion-dollar funds. They tend to trade the most, again, also because they have a lot of individual investors, which goes back to the reason why we wanted to create this. The more individual investor the person is, right, the further down the scale they are as far as wealth. An institution, they can find liquidity whenever they need. They can sell a book of business they can find it easily, right? An accredited investor or an individual investor might not have the same resources at their disposal to be able to find liquidity. And so knowing that was where the direction of these funds were being created was to increase the activity of ownership among individual investors. That's really where that comes in. So you have a multi-billion-dollar fund, there's a lot of times a $3 billion fund might have 50,000 investors. So you can imagine that if that fund has been around for 10 years and it's not had a liquidity event, there's a lot of people that are raising their hands saying they want out. you might even have a situation where a fund goes to list on exchange. They've been around for a long time. They're like, okay, we're going to create a liquidity event by listing on exchange. Well, what happens when 50,000 investors all have a sell button at the same time? They all want to sell. And so a lot of times you see events happen when those funds go live. They, in many cases, plummet right out of the gate. And it's because you have 50,000 people that for the first time have the ability to sell their shares. And so what we try to do is work with those funds before they have the listing event to say, listen, we can work with you, get institutional investors to come in and be buyers of that fund so that you don't have it all hitting the market all at once and creating that downward pressure. In most cases, the buyers that we have on our marketplace, they say no matter how much they wind up acquiring, they say, this is the price that I want to buy it at. They say $10 is my bid, and that's where it is. And they'll keep buying it at $10 until something materially changes.
Yeah, that's definitely interesting. I just remember taking me back to my past working in public market as far as, interval funds. And that was kind of a challenge, right? One, the cap of liquidity on a quarterly basis, and two, trying to get listed on platforms that, they couldn't get on NSCC because they were, they had the interval requirements, right? So, and AIP was kind of where they were placed initially. But now you're kind of really solving for a few different situations here. One for liquidity, but also just kind of how people are handling liquidity events in real life at different
That's right.
stages, right? Which is really interesting to me. I'm curious, is there any type of, kind of mandate or due diligence requirement or size of fund or size of opportunity on your platform? What does that look like?
So for various funds that are on our platform, I mean, they can range anywhere from, I think the smallest fund that we've ever traded was like a $25 million fund, where we've had liquidity events in that. And I think it's gone all the way up to when BREIT was a $70 billion fund, right? So it's a wide range, very wide range.
Yeah.
But, a lot of times DSTs aren't going to be very large. They have a handful of investors and they're, somewhere in the neighborhood of 25 to $75 billion. And particularly if they're like single asset funds, but yeah, there's no real size requirement for private funds. Sometimes there are some limitations, and it really comes down to transfer restrictions. So if there is a transfer restriction where the fund says we can't allow this, or the individual investor has to be diligenced or approved by a bank that holds the debt, something like that, where it's then obviously that becomes really complicated and probably not the best use of a secondary market. Not saying that we wouldn't attempt to do that, but it would be much harder to get a bank to approve. If you have to get not only the sponsor to approve it, but also a bank to approve that new buyer, that becomes a lot more challenging, time consuming.
Yeah, for sure. Do you see a good number of fund of funds as well? Just curious, coming your way.
We do. I would say not as many. Most of them are kind of larger, broad market focused. They're pretty targeted as to what they're addressing, but there's a couple that are fund of funds. Yeah.
Interesting. Yeah.
How long does it take to settle a trade?
It can vary greatly. So we use an electronic process, and really what it comes down to is where it's being custodied, right? So in some cases, it might be direct with a transfer agent. If that's the case, usually it settles in a week. If it's held at Schwab, they're a bit of a bottleneck, and so it can take maybe 3 weeks to settle that trade. But if we're the transfer agent, we could do it same day, but we do it next day. So we have next day settlements. We're actually kind of proud of that we beat the equities markets to next day settlements. But when you control the cap table and you have the secondary market attached to it, it really allows you to speed a lot of things up.
Yes.
Plus, what everybody's going to, right? And you're already there, been there for a while.
That's right.
Yeah.
That's right. Yep.
I love that. Is there, how does it look placing a trade? Is there an active order book? Like, you gave us a couple great examples, like like the BlackRock's B REIT, where you mentioned there's like liquidity, there are buyers there. Is there an order book when I go to place an order, or is it just kind of what does it look like?
Yeah, so we do function a lot like a traditional marketplace. So we do have an order book. In most cases, though, I mentioned earlier that the bids that we have from our buyers are relatively static, and so usually they'll update them once a week. Some of them are more like once a month, but but what they do is they put out IOIs. In most cases, they put out an IOI, which is an indication of interest. It's non-binding, but it helps the seller know where the market is. And the reason why we initially didn't start with IOIs, we started with limit orders. So the buyer placed a limit order, the seller placed a limit order. But the reason why we integrated IOIs was because another thing that doesn't exist in the alternative investment world, except on our marketplace, is that we are putting in the capability of really protecting both the buyer and the seller from any counterparty risk. So if somebody's putting in a limit order, we know they have the shares and or we know they have the cash, right? So for us, if somebody's going to put in a limit order to buy something, we need to know they have the cash. And so some of our buyers are buying 20 different products at any given time, and so they'll put, since if they have a $10 million interest across 20 different products, we aren't going to make them put $200 million deposit on our books, right? Rather, they can reflect that. They'll keep some money in their account at any given time to quickly execute, but they'll put an IOI out there that's non-binding. It shows directionality of the market and that type of thing. And then the seller comes in, they place their limit order. That triggers a notification to the buyer that, hey, there's somebody that meets your, band of where you're putting your limit order. And so then they react and put a limit order. It instantly matches and goes from there. So very traditional market structure. If for some reason we don't have a bid, most all of the time we do have an existing bid. But if it's a brand new private fund, maybe there's not one there. The seller can either place their own offer, name their own price, or they can do what's called an RFQ, which is a request for quote. And that sends a blast notification out to our entire buyer network, or at least those that have signed up saying that, hey, I want to be notified when there's a request for a bid. And so they will come in, do the due diligence, and then they'll place a bid. The seller gets notified that there's a new bid, and they can kind of go in and review that at that point.
Yeah, that's cool. I mean, it seems like there's a lot of opportunities as a buyer to potentially, like you mentioned, like people want out of these investments a lot of times where you've been sitting on it for 10 years. I just want liquidity. Where there's an opportunity for some of those buyers to, I don't know, maybe even just set some kind of stink bids. But there's opportunities to make money on it. It sounds like.
Yeah, absolutely. I mean, so that's the thing that's great, and our hope was that yes, it provides opportunities for buyers to get discounts, but the goal was also to create an open marketplace so that people were competing bids, right? And so in a lot of the funds on our marketplace, we do have competing bids, which is fantastic. And I'll go back to the the Blackstone story of BREIT. When we were actively trading that, the first bids that came in were somewhere around 15% discount. And those are large institutional sized bids that were coming in, in some cases, hundreds of millions of dollars were interested in being buyers. But what we found was that all of a sudden there were people that were competing and wanting to have access to those secondary shares. And so different classes of buyers were coming in. Ultimately, we wound up having executions happen just over 4% discount. 4% discount is pretty fantastic in the illiquid market space. But they were financial advisors that had kind of a mandate to be buyers in those funds for their clients. And they were saying, I could either go directly to Blackstone and buy it at NAV, or I could buy my client's shares on this secondary market at a 4.5% discount, and I look like a hero. And so ultimately that's what they did. And so we saw a great compression in trade, exactly what, you designed the marketplace to do. And it tightened from 15% all the way down to 4.5%. And that's where we saw the lion's share of our trades executing.
Yeah, that's really interesting. You gave us a lot of different cool examples as to how people are using your platform or what the drivers are. Any other interesting use cases or reasons why people would list on your platform that we can talk about yet to this point?
Yeah, I think there's there are a few others, but one in particular that stands out is people say what existed before you guys did this, and probably in the private investment space, the biggest thing that people would see were mini tenders, and I've written a lot about mini tenders. I think they're pretty evil in most cases, and so what happens is there's an SEC allowance for somebody to go out and say, if I'm an owner, if I have an ownership in any shares, I can go to the transfer agent and I can request to know every shareholder in that cap table and their address, their physical address. And I can send a letter to them saying, hey, the investment that you have is a piece of crap, and I'm willing to buy it, take it off of your hands for 40 cents on the dollar. And there's a lot of people that are unknowing and and answer that, and they get it and they sell it for 40 cents on the dollar. And for me, I think it's I really wish there was a way for the SEC to kind of come down on those people who are doing that. As of right, I know they've written about the fact that they don't like it, but they haven't done anything about it. And so for us, we don't have that same capability. We don't have the ability to get inside of the person's house and tell them that, hey, there's an alternative that allows you to be able to get, 30 or 40% more on your return by trading it on a secondary marketplace where there's multiple people bidding for that. And so they only get something through the door. So it's a big marketing effort for us to be able to figure out how do we get into everybody's doors, right? To be able to let people know that we exist. And, really, we don't market to individual investors. We mostly market to advisors and their firms. And then, of course, the best way that we can work with people is to work with the fund, right? So if the fund gives a kind of a tip of the cap to us and acknowledges that, hey, this is the place where if you're looking for secondary liquidity, this is the place to do it, which is, again, another reason why we want to be able to partner with them. You may already be listed on our marketplace, but we can provide additional services for you as well and save you a tremendous amount of money, and give you a great experience. So hopefully that's the kind of the winning combination.
Yeah, that's great. And then the one thing I was curious about as you're kind of telling us about that is, I mean, are there opportunities for like private companies to listen on your platform and kind of hopefully not too much of a segue, but like, let's say private equity comes in, private equity fund that's worked with you guys, they go, hey, this particular investment in this restaurant, we want to get rid of, could we unload this to another private equity fund or somebody else in the platform? Uh, so I guess like private businesses is kind of the main question, but also is there an opportunity for like these private equity companies to come in and get rid of these maybe non-performing assets or assets they don't want?
You mean like assets that are within the fund to be able to
Yeah.
spend something? So I would say today, no. Is that something that could possibly happen in the future? Yes. In the private equity world, one of the reasons why we didn't start there, when you're looking at individual companies, given my background of being at the exchanges, I would love to be able to be in that space, right? I think that would be a good place to be. However, there is already there are some other markets that are trying to address secondary liquidity there. So for us, the areas that we've started, there really is nobody, right? We're kind of the only ones that are really providing a secondary market. Like I said, long term, that might be something that we do, but working with private companies, 100%, like private funds or that are dealing with an asset that where we have buyers, 100% will look at that way. That's an important aspect of our business. And like I said, we do have real estate deals, and there are opportunities where we've seen people unload individual underlying assets. They haven't necessarily done that through the marketplace, but through our connections, they've said, hey, do you know anybody? And so we'll kind of make some connections behind the scenes.
Yeah, makes sense. Very cool. I guess, obviously, given kind of the connectivity you have in your platform, you probably see a lot of data, a lot of different things happening, probably interesting trends that you're seeing as well. Use any type of sophisticated technology, AI related. That's kind of the buzzword these days, what people are doing with the new AI tools and opportunities that people look at with different algos and things they're looking at to slice and dice the data, provide interesting insights, all that infrastructure there.
Yeah, so we haven't partnered with anybody outside of our firm, but we have built some AI tools. So if you go to our marketplace today, any of the funds that are registered funds, you can go to our marketplace and you'll see a really pretty display of data, if you can make data pretty. So what we do is we created an AI tool that goes out and scours the SEC's website of all public filings, right? And then it pulls all that data in, it crunches the numbers, it normalizes the data, and then it puts it out in a nice visual display. So it helps buyers be able to diligence the fund, and it helps sellers know what they have, that type of thing. So we have leveraged AI to be able to do that. And then on top of that, those same tools that we built, it doesn't necessarily use the same AI to normalize data. I guess it does normalize it to an extent, but we run all of our private funds through that same algo. So that we've created that goes out, somebody just feeds us the information, we process it the same, and now we can display it in our marketplace and give great visual representation as to what those funds have, what they hold, what their financial history is, all of that. And obviously, for the private funds especially, the outcome is only as good as the data they're willing to give us, right? And so in some cases, people are very transparent. They're like, yeah, I'll show you everything. And others are like, they want to show very, very little data. And so the one thing I would say is that, particularly if you're looking at a secondary liquidity event, the more data you have, the better price, the more interest there's going to be.
Yeah, that makes sense. It's interesting.
With real estate, it's actually, there's so many data points that you can really get to a definitive answer as to what a price should be. If you understand general market elements of real estate, you should be able to do that probably easier than what you could with private equity, right? Valuing a company that has a lot of intangibles that are maybe undefined would be more difficult.
Yeah, definitely.
Yeah.
And I guess from your platform perspective, what jurisdictions do you cover? Is it just U.S. based? Is there any other aspects that you cover globally? I'm just curious there.
Yeah. Right now we're U.S. based. We do have some international buyers on our marketplace, but yeah, most of what we cover today is U.S.
Okay. If you were a Cayman fund or a BVI fund, you could be listed on your platform.
Could, yes.
Okay. Excellent.
Anything you want to talk about that we haven't touched on yet, Brian?
I think we've covered a lot of it. I think, again, when we're talking about the markets generally and how they are able to get data, again, data, having access to the ability to invest in new funds. I think one of the other things that we're getting ready to create in the near future is partnerships with sponsors that are doing multiple funds, and they're maybe the sponsor for individual issuers of funds. And so we're actually white labeling what we do to be able to provide it to them so that the onboarding is all on their website, and they can see that everything's branded for them. It looks like it's their product. And the ecosystem, the investor experience is all completely owned by that sponsor, but we're able to provide that entire experience and, like I said, white label it for them and give them something that right now doesn't exist. And so, but we're taking that a step further by being able to provide that white labeling even to sponsors that are collecting a bunch of different products. And then we can take those same products, and even if they're doing primary fundraisers, we can put those on our marketplace as well and be another channel for them to be able to do fundraisers.
Yeah, really cool. Just another way to get capital. I like it.
Absolutely.
Yeah. Very exciting.
Well, Brian, this has been a lot of fun. Really appreciate you taking the time to do this with us. Where could people go to connect with you and learn more about Lotus Markets?
Yeah, so you can visit us at lodasmarkets.com. That's LODAS. It stands for Liquidity on Demand as a Service. And then so that's lodasmarkets.com. And then visit me on LinkedIn, connect with me there. And I'm sure in message notes, you might be able to share my email address. But yeah, happy to connect with anybody who's interested in learning more for sure.
That's awesome. This is great. We'll make sure to include all that in the show notes.
Perfect. Well, thank you so much for having me. This has been really great.
Yeah, a lot of fun. Thank you, Brian.